And before we wrap up the show, we leave you with a story on India's venture capital landscape, which is experiencing a powerful transformation. For many years, foreign venture capital powered the growth of Indian startups. However, a distinct trend is now emerging. The next wave of Indian companies is being built on Indian capital. How will this shift mark the redefinition of India's entrepreneurial landscape? Aishwarya Anand decodes. Take a look.
Indian startup ecosystem has raised over $12 billion in 2024. However, 85% of that capital has come from overseas investors, large sovereign wealth funds, large private equity players. Only 15% of domestic capital has flown into the ecosystem. Now, there is a big push to get more domestic capital invested into venture capital funds that will then go on to invest that into Indian startups. But how do we unlock its full potential, create deeper pools of limited partner capital, and more supportive policies? Let's find that out from some of the prominent voices in the startup ecosystem.
Family offices is one pool of capital. Another pool of capital is balance sheets of corporations. Can companies invest directly into startups? Now, there are a number of regulatory issues around companies investing in other companies. They might get classified as NBFC or core investment companies. So if some of those roadblocks can be removed, it will help a lot.
We see lots new players have come in, but there is an entire, companies don't simply wake up and grow on their own, right? It's not simply about transacting. A lot of it is about, making sure that companies are able to access the right talent pools. It's about making sure that they understand the need to build the right culture appropriate for their business. It's about, the scaling up errors and issues that happen at different points in their life cycle. It's about understanding the Peter Principle kind of issues which inevitably happen in high growth businesses. It's about adapting to customer needs in an ecosystem and environment which is evolving rather rapidly. It's about, even evolving to economic cycles and customer shifts in preferences. So it's a lot, there's a lot which goes into making companies succeed, not just transacting. And I think that the onus is on participants in the industry, including ourselves, to make sure that we are actually, we can facilitate and aid these fabulous entrepreneurs that we see in a more effective way.
And what would be that more effective way, if I have to ask you? Because of course you need more, LPs need more funding from family offices. So how do we bring in all the factors together?
I don't think that it is because of lack of capital that we have an issue. Yeah. The other thing that I think that, systematically the government could do, and I think they are doing it in some form and fashion, is to give preferential market access for Indian startups, right? Yeah. And sort of promise that if you can develop A, B, C, D, E in different parts of the ecosystem and you're a domestic company, we will give you some kind of protection umbrella, etc. The sense I have is that the intent is there. Again, in terms of execution, if that's a little bit better, it would help.
Mr. Bhasin mentioned that there's no dearth of capital in the ecosystem, right? But it's players in the ecosystem who need to really work it out so that the inflow is much better. So if there is no dearth today, what are some of the roadblocks? Whether it could be, are there regulatory hurdles that you feel that exists for more domestic capital to flow in? Should that be eased a little bit more?
We have to understand and create a different classification, what's called an accredited investor. Right? Somebody who has a net worth of more than $1 million. In India, I say बहुत लोग हैं आज के date में. I don't think they need to be given this. They don't want the same level of regulation on their fund investments as maybe probably a mutual fund, which is also targeting a 1 lakh, 2 lakh rupee investor for a year. Because of the over-regulation is becoming much more difficult to raise money. The cost of even running such funds is going up. Like a 200 crore fund will have a custodian, it will have a trustee, it will have a valuer, a separate auditor, a separate accounting firm. Ab yaar, in sabko manage karte and you have to be very fast at deploying money. Yeah. Same thing in the US or other developed markets is very quick. Yeah. Now we're not targeting investors. Like all my investors are family offices. They all have net worths of $25-30 million plus. They know what sophisticated product they're getting into. They're not your typical retail investor. But I'm subjected now to the same regulation as them. So I think that has to change. The regulations around their fund investments need to be lower. I'm not saying just it's free for all, but you have to understand that in other ecosystems they're moving much faster than us. Today, if a company approaches me it'll take me 6 to 9 months before they'll ever see money from me.
Yeah, yeah.
Simply because मुझे इतनी सारी processes करने हैं
Yeah, करने पड़ेंगे
Before
you can start
giving in the money,
economy.
right?
Yeah, correct.
Compared to the US, people can get funding within a week,
Yeah.
within
yeah.
within 2 months, within a month. That's the speed AI is moving at. And if you're not able to match that speed, talent is going to move to other markets.